Now in this video tutorial, what I want to do is spend some time just going over the estimated seller's proceeds form. And then later on we'll be doing the buyer's or the estimated buyer's costs form. And so in order to do this, you can see the form is on, if you will, my desktop. What I'm going to go ahead and do is maneuver or move some screens around. So I'm going to try to make this area a little bit larger for you to see. So I'm going to move this up as close as I can to the top here so that we can have more of the form showing. And then I'm going to go ahead and scroll or pull this down so you can see more of this down here. And I think this will be pretty good. I'm going to move my little clock timer over here out of the way. And now you can see the form sitting in front of you. And again, this is the estimated seller's proceeds form. And a couple things I just want to go through with you and just tell you where this information comes from. First of all, the names of the sellers are located right here, and the date of the transaction is right here. And I've kept the date the same because I'm using the same form on some quiz questions you're going to be having, where I'm going to have you take this, fill this form out, and then make some changes and then recalculate some costs. This is the property's address. This estimate is based on costs associated with a type of financing. So if you had, for example, conventional financing would have different sorts of costs associated with it versus FHA versus CalVet versus many other different types of financing program. So each time you're doing a financing program, you may have additional more cost or less cost. So you want to make your net sheet based on the type of financing that's going to be available. So for example, you may have some form of a government program where the veteran does not pay or is limited to the amount of points they're going to pay on a loan or the kind of costs they're going to pay. Down below that, this is the projected closing date. This is the current property taxes, and what we're doing is we're saying this is $2,000 per year, and we are getting this from, if you will, right now the Placer title property profile. Over here on this side is the proposed sales price. This is the monthly homeowners association dues, if applicable. Going down here, and again, I could have put a lot more information here, but what I'm trying to do is keep this as sort of as simple as possible. I'm going to go down this side over here first. The information I put in here, I put a fee in. So for example, anything that you would have, any current charges that you would have on the existing loans, in other words, what the lender is going to charge you on the loan that's existing on the property, would go in this area right here. We're saying that the lender, just to give you an example, would charge a demand and a reconveyance fee of $75. And for our illustrative purposes, you can go ahead and put that in your sheet, but you would be getting that from an existing lender. Your escrow officer would be able to tell you what that is also. Down below here, what we're doing is we're making the assumption in this particular case that the seller is paying all of the escrow and title fees. So this is coming from the Placer title escrow and fee schedule. So that's this amount, and then these what we call drawing and notary fees. That's charged by the escrow company. And again, they could have more fees than this, but this is just the purpose of serving as an example. This is the current encumbrances that are on the property. We have a first loan in the amount of $2,000. The interest rate on that loan is 6%. There is no existing second loan on it or any kinds of lines of credit or bonds or anything like that. They just have the basic loan is all I'm putting in here, again, to make this easier to follow along. Down below here, you'll see that there are other expenses. Of course, we need to make sure that you charge your 6% brokerage fee, which is paid initially to the person that lists the property for sale, and then that's split between the listing agent and the agent that represents the seller, called the seller's agent, and then there's a final split between the agent and the companies. But suffice it to say, the seller is going to be paying 6%, which is going to be based on the sales price of the home. The county's going to try have a transfer tax fee of $1.10 per thousand, so that's $1.10 per how many thousands of, in this particular case it would be 475,000, so it'd be 475 times $1.10. Down here is, these are prorations. In other words, prorations that are going to be paid while the property is continuing to be owned by the seller. So they're going to have property taxes of $60, or I'm sorry, 60 days in that amount. Homeowners dues for 60 days in that amount. We're not charging or paying for any of the buyer's closing costs. If we were, we would have that in here. This is going to be the natural hazard disclosure report. This is the inspection fee for the termite company. Here we're estimating that the seller is going to have roughly in the neighborhood of about $2,000 in corrective items that they have to fix. This could be things like dry rot, spraying for termites, whatever. We're also saying the seller is going to buy a homeowner's warranty policy for the new buyer. There is a homeowner's fee to transfer who owned the paperwork by the association from the buyer to, or from the seller to the buyer. They're going to charge $150. And these are the total estimated expenses. And if you look at this, it's really, you got a big chunk of money going here to the real estate agents, and that's where quite a bit of the money is going. And plus, if you look at all these other figures that are in here, that's where we're getting that from. If we had any credits, in other words, we had something coming back into the escrow to help pay for the money that's coming to the seller, we would put here. And then this is the actual recap. This just shows that the estimated sale price is $475,000. They're going to have to pay off a loan of $200,000. They've got expenses, which comes from this figure right down here, right up here. This is the estimated total seller's proceeds. And then this would be if there was any notes or anything else that are carried, or there was any withholding that was being done. And then we come down there. This is how much money they're going to get. This is the amount for the, where the seller signs, both the seller, the date that they sign. This down here is the name of the company representing them. This is the agent. This is their Bureau of Real Estate number. You'll notice that came from the cover sheet. This again, this information came from the cover sheet. So this gives you an idea of how this works. One of the things I want to point out about this this sheet is that you will notice, and it applies both the buyer and the seller, is that anything that is in white right here is something that is just displayed. In other words, you can't enter any information in here. On the other hand, if there's this tannish brown color that's in here, that's where you can add information. So for example, if I go in here and I'm sitting with the seller, and the seller says, well, what happens if we raise the price of the home for sale? And say, for example, they want to turn around and raise the price to $495. Now watch what happens to the figures when I do this, and then I click off of them. You'll see them all change. Actually, let me make sure that's a 9 here. I'll put a 9 in here, and when I click off of it, you'll see all the numbers change. So boom, and you see that they've all changed. So the point is that you can use this statement as a what-if statement. So going back, you can go back and forth with the seller and say, what if we change it to another price? The only thing to keep in mind is that when you're doing this, is that some of these figures are figures that are not automatically adjusted in the sheet. So for example, the escrow and the title fees, those fees are coming. Let me just click over here. Those escrow and title fees that are over here are coming out of another chart. In other words, some expenses that are provided. So what's happening if you raise the escrow, if you raise the sales price or lower it significantly, then these figures will change. Also, we're making the assumption, for example, this reconveyance fee is stable, and you will see, you know, and that we're going to continue to pay if you will, the property taxes and all of that for the period of time that we're there. but most of these fees are stable. Just keep in mind that some of the fees, the ones that you're going to go to a schedule and get and put in, need to be changed if you're going to make any changes in the sales price. And this then should provide you a pretty good overview of how the net sheet works, and or the estimated seller's proceeds. We call it a net sheet. And again, what you're trying to do is calculate with the seller on how much money they would get based on this sales price and this time, how much money they would expect to get as a check when escrow closes. So remember, you're the one that's calculating this, so you really do need to know how all of this works, and I would recommend that you would take every one of these fields and make notes to yourself and know exactly where that information is coming from so that you fill these sheets out correctly. And when we come back, what we're going to be doing is dealing with the estimated sellers or estimated buyers' costs.